Hey guys, welcome back to the After Hours. I'm the ATGL Beast, and today we're going to talk about the market's back. When it comes to when the market's back, that means volume's coming into the market. That means there's a huge parabolic or some type of event that's caused retail traders to flock into the stock market, more specifically into small caps. Now, when small caps are running wild, you need to be able to capitalize on the opportunity in front of you. One of the things you have to know, when you have a trade signal that shows there's a support or bottom in the stock, you have to realize a lot of longs really like that, which means longs are going to buy the dip. Now, when you see a support, we don't know the exact percentage, but there's a chance that the stock price can bounce. But when there's a bottom inside of the stock, that's a little different, because when there's a bottom in the stock, that means volume can accumulate from the bottom, which means it can form a support. Now, if we peel back, what is a support? What is a bottom? That can be answered in so many ways, because the stock market is that kind of place. You can answer it as precisely as possible, or you can answer it as vague as possible, and both people are right. Now, one of the most common signals that's used to signify a bottom is a catalyst, and that's usually something that promotes a stock, because you'll recognize that retail is pumping a stock, or the company is pumping the stock. This usually happens when there's a news runner. Now, with a news runner, this pretty much means that there's positive news. There's some type of promotion going on, whether it be at a conference, whether it just be money involved. It could even be a big deal with the government or someone better in that industry. When it comes to being a trader, you have to understand there's a big difference. It's usually black and white between a good trader and a bad trader. It's not about the money. It's actually about the game. We're talking about the series of games and how you play it. If you're a good player, you'll be able to improve, which is the best quality that you can have as a trader. When we talk about bad trading, it's literally anything else. Now, we've seen a lot of opportunities this week, but there were only a few A+ setups. Now, a few of those names are AIRE, SJD, and ATGL. When it comes to AIRE, this was a great resistance play. Now, I'm talking about these resistances were over 100 million. Now, when you couple that with massive extension, exhaustion was inevitable. And so we saw a downtrend when it came to $15 and $16. 3 times back to back. Those are 3 separate opportunities in 1 week where you could have profited on your next short. To finish off the week, on Thursday, we also saw SJD and ATGL. Now, out of those two, SJD was the best opportunity. So let's talk about ATGL. Now, ATGL, this was a technology company from China. Now, when we think about Chinese stocks, we understand that they are highly manipulative, and a lot of the statistics are usually messed up. Now, what's important with ATGL is that this had no particular news why it ran. But what's always understood is that retail does not need a reason to pump a stock. And ATGL was one of the stocks that the retail chose to pump. Now, we all know that the reason was just because it's a Chinese stock and it was a low float. People were comparing it to AMTD, which was also compared to HKD. Now, they want to run this stock from $6 all the way up to $2,000, just like they did on HKD. Now, this is actually being compared to AMTD. It was actually the biggest stock of the year. If you don't trust me, look it up. AMTD was the parent company to HKD. So a lot of people compared the two whenever there was massive price action, and they usually followed each other. But the price action was too exaggerated on HKD. When it went to 2000, AMTD only went to about 30. But this week, AMTD is being compared to ATGL. Now, ATGL, this is just another Chinese company. It's not even in the same sector as AMTD, but they choose to make this the next one that goes to 100. Now, let's talk about the number 1 stock this week, which was SGD. This is Safe and Green Development. Now, Safe and Green Development, that's real estate. They recently just did a merger and it had a 1-to-5 ratio. Now we know the float is around 2 million. Because of that, we understand that this stock can be very volatile, but the volatility that just happened cannot be explained by any type of news. At least that's what you would think if you look at the headlines. We see SJD went from 40 cents all the way up to $10. That's going up 2,000% in 2 days. Now, why did this happen? If you go back to that day when it was at 40 cents, you'll see there was a filing. It was a RW filing. Now, the history of RW filings means that they reverse a decision that was made inside of their previous filing. And whenever that happens, it usually means the stock is going to receive a lot of attention. People are going to speculate because that's what traders do. And RW filing is one of the go-to bullish catalysts when it comes to multi-day runners. If we want a news runner and you see a RW filing, a lot of people put their money in their house on that. It might be for a little bit, it might even be for a few days. So when we talk about foreign stocks, you have to understand foreign stocks are very dangerous. They're dangerous because a lot of the statistics are fake. I'm sorry, but you have been lied to. Chinese stocks, you have to understand, they're highly manipulative, and the reputation they have is pump and dump. Now, when a stock actually shows up inside of Chinese stocks, if it starts grinding, whether it's up or down, if there's even the slightest amount of volume, a lot of the times, that's not even retail trading that stock, which means that there's no liquidity. And if there's no liquidity, if you get into that stock, you will be trapped. Now, if we just talk about the mindset of a good trader and a bad trader, it's usually like this. I'm going to test my system. I'm going to review. This tells me I should trade, so I will trade. That's a good trader. But a bad trader, I'm going to continue until I win. And even outside of their trading, they're focused on themselves in general, because trading overall is just self-improvement. Another way you can define a good trader is by their focus. When I talk about focus, it means they pay attention only to the things that matter towards their trading system. And that trading system is tailored to the long-term gain. The good trader is not focused on making money right now. They're focused on creating efficiency to where their system will create money for the long term. And all they have to do is maintain the system. So let's take a step back and think about psychology. Now, we know trading psychology is a big thing inside of trading. Now, we all come to the market for the same reason, and that's to make money. But you also have to enjoy the process. If you can't find any type of peace inside of trading, there's a lot of other ways to make money. You should probably go find some other job to work on. The market is actually a microcosmos. It's a small version of life. Now, the same way that you have to break down the market into controllable systems and processes, there is the dopamine system. With the dopamine system, we know that's the happy hormone. When dopamine spikes, that means we feel really happy. And one of the things about dopamine in trading is that you don't have to receive the reward before you get the dopamine spike. If anything, the anticipation gives you a desire and you feel 100% of that happiness. When you have a max amount of dopamine, it usually creates your baseline happiness about everything else. It pulls it up, which means next time you feel happy or you do that thing, it's going to require more to be just as happy. Now, if we're talking about a trading system and we want to stay happy consistently, we have to find some type of balance that gives us motivation. When we trade, we like money. We want money. But if we chase that, we're going to burn out. And burnout in trading is a very common thing. Most people quit after weeks or after months, or just a few years. But we don't want to look at it that way. We want to look over the course of 20 years. And to stay motivated with that, we're going to have the right focus. And that is going to hone your desire. Now, there's another level to this. We're talking about motivation. Now, when we talk about motivation, we have to understand that you can be motivated by anything. And that motivation is very short-lived. It might last a week, it might last a day. Now, if we want to be smart about it, we want to have the best motivation. And that's the motivation that keeps on building. And that's funneled by your desire. When we talk about the dopamine system, we understand that the happy hormone is something that we can hack. If you want to have the most efficiency, you should hack yourself as a trader. In general, you should hack yourself as a person through self-actualization. If we talk about that, we need intrinsic motivation. Now, intrinsic motivation, it usually starts with having a goal. Every time you take a step towards that goal, you envision yourself actually achieving that goal. Main thing is we want to create habits. And the best way to create those habits is to make sure your habits are tailored around your primary desire. You have a desire to feel secure. And inside of the stock market, having security is very rare. It's an ambiguous market. Everything's unknown. If you want to create some type of control to feel that amount of security, you have to figure out what is exactly in your control. And you can make trading as complicated as you want, but it usually comes down to willpower. And just as much, it's about how do you position yourself to the point where you don't have to use willpower. If you can make it in trading, you can usually make it anywhere else. You just need time. Now, a big part of it is also your environment and culture. Now, if you put environment and culture inside of trading, it's usually very toxic because it handles everything at face value. Now, when we talk about face value, sometimes if it's obvious, it's a good thing. But if it's too obvious, it's probably a trap. Only way to have any kind of control in the market is to work smarter. And the smartest way to work in the market is to destroy your ego. There's going to be evidence that the market gives out. We have to take that evidence and figure out what the market is offering. We all can do it in a different way. The name of the game is to be in the top 10% because they are the only ones that make money. It's not about how you play the game. It's about how do you play the series of games. What's your drive? What's your motivation? Is it the money? Is it the challenge? If you're not challenging yourself and pushing your limits, you can probably go find money somewhere else. If it's fun, you probably came to the right place, but it can be too fun. That's why you need some type of peace as well as awareness with the entire situation. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.